Hey everyone, welcome back to the channel. This is going to be the week 15 of our trading watch list. We have been running this series to sell options and generate passive income. In today's video, I will share with you the trade results from week 14. Which trades did we take? Which trades did we roll? And what am I watching for next week? We have a massive earnings season kicking off in the next week and a half, and we should be able to set ourselves up to take those amazing trades that will be coming our way. So without further ado, let's dive in. Last week, we had a slew of red until Thursday, and even when the jobs numbers came out on Friday morning, we had a massive dump in the market. However, the market actually picked back, a lot of buyers stepped in, and for the week, we kind of ended a lot of stocks in green. So as you can see, Microsoft was up almost 3%, Google was up more than 3%. In the tech sector, you started seeing a lot of green, and we are still seeing a lot of red in other sectors, especially in the finance, energy, even healthcare was kind of a mixed bag. Now, one of the main reasons that we still haven't found the direction in the market is because of this, which is the earnings season, which is going to be coming up. So as you can see that from next week, we will have Pepsi reporting earnings. So that's going to be a major one. And then officially the new season kicks off with Delta reporting earnings Thursday after close. Friday, you have a couple of banks like Citi, Wells Fargo, PNC, JP Morgan, United Health Group, some big names reporting earnings. Following week, we'll have Tesla and Netflix, tech kicking off earnings. This is going to be a massive earnings season because it is going to set up for Q4. If we see weakness, we might see S&P 500 dropping further. A strong earnings over here could take us to all-time high for the year, and that's what we are all hoping for. There are currently 3 trades in play, and then I have a 4th trade idea that I will talk about at the end. The first trade is on AMD. We opened a $102 put for AMD expiration October 13, 2023, and we have gained about 76% into this contract. We have been running the AMD campaign for 10 weeks now, and in the 10 weeks, we have generated $1,070 in premiums. Currently, our cost basis is $102, and the current stock price is $107.24. And if you look at this chart for AMD, what it tells us that 102 has been acting as a resistance level and a support level for AMD. And the moment the stock price falls below the 102, you will see a lot of buyers stepping in. And this exactly is what you can see right over here. In the last 3 days, AMD has been respecting the 20-day moving average. And on Friday, we had this massive step in. And this gives a lot of confidence to traders and investors in AMD. This bar was very solid on Friday. There's a lot of buying pressure on Friday, and you can see even the volume on Friday was much higher than the previous days. The reason this candle is very important is because this candle not only broke through this downtrend line and the uptrend line, it closed above this trend line with a solid bar, and it shows the strength of the buyers. And if AMD stock price remains over $102, which seems to be the new support level, we would be most likely be able to close our contract with 100% profit because the contract is going to expire worthless. Our second trade that is in play is SLB. Currently, we have a put that is open for SLB at $59, expiration October 20th. We initially opened SLB at $59 on September 29th, and since then the stock has really dipped down because the energy sector across the board was down. And because the stock price is currently $55 and $70, we were severely in a loss. And if we would have not rolled this contract, we would get assigned this week, and we would be in a hole by $4, which equates to $400 in loss. So what we did was we rolled that contract out. We ended up paying $304 to close that contract, but we got $363 in return for 2 weeks. Our total premium is around $146.65. Unfortunately for SLB, the energy stocks were down the last week, and there was a lot of pressure on energy stock. The good news is SLB is going to be reporting earnings in the coming days. It's going to be around the October 20th mark, and I did not want this trade to go against me by getting a stock at $59, whereas the stock is now $55. By continuing to roll these options further down the road, I am collecting premium and preventing myself from getting into a position with losses. So that's the idea. Third trade that is currently in play is Tesla. We had a Tesla 265 call, which we have been running for a couple weeks now. We are currently up almost 50% on this trade. And looking at the whole campaign for Tesla, we have collected $2,234 in premium. So our effective cost basis or adjusted cost basis is about $242, and we are selling the call at $265. So you can see how much profit we would be making on the Tesla stock. The next trade idea is on Exxon Mobile. Currently, the stock is in a downward trend. It has broken through its 20, 50, and 200-day moving average, and you can see the stock is almost at the oversold territory of 34.11. There's a lot of volume that has happening, so a lot of selling pressure has been on Exxon Mobile. One of the catalysts that I think could drive the stock price back to its all-time high is the Exxon Mobile closing in on the mega deal with shale driller Pioneer. If this deal goes through, this could be a major upside on Exxon Mobile, and this is one of the reasons why I am very bullish on Exxon Mobile for the midterm. We continue to see $120 as a top for Exxon Mobile, and now the stock is down to 107. Generally, Exxon Mobile has a very good support level at 99.56, so you can see that there is still a lot of downside left if the stock decides to fall further. If that deal goes through, we could see Exxon Mobil at its all-time highs of at least coming back to the 120 level, which is still a massive upside from here onwards. So there are two ways I can play this out. Number one is I can open a cash secured put, and the way I will look at it is looking at about 4 weeks or 5 weeks out on a cash secured put. And about that, I would target around the $99 because 99 is a very good support, and it also gives me a lot more buffer if the stock decides to plunge further from here onwards. 99 is around the 17 delta, which is very conservative in my opinion. I generally tend to play 25, 30, 35 delta to generate premium. And by giving up a little bit more premium, we are protecting ourselves from any major collapse from here onwards. The current price target for the midterm of Exxon Mobil has been given about $130. Even if I take from this point onwards to where we see this trend line of $120, we have over 12% of swing trade that we can take advantage of. So Exxon Mobil will be on my trade watch list for the weeks to come. I will keep you posted when I take that trade, so definitely follow me on Twitter. So hopefully you enjoyed today's video. If you enjoyed it, make sure to give us a like, click on subscribe and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.